You're surrounded by 12 million traders, with $100 million trades happening every day, and you're stuck between a $1,000 investment and a life of luxury, with the odds of advancing to the next level at 5% and a potential 20% return on investment. But you'll need to navigate the market's ups and downs with a 10% daily fluctuation to get there. And the stress is already taking a toll, with a 2-pound weight loss in the past week as you try to make a 15% monthly return. You're one of the 12 million retail traders, risking $1,000 in a $22 trillion market, with a constant stream of Bloomberg updates in 4 a.m. Market opens, the odds are against you. 1 in 10 traders make a profit, and you're using a TD Ameritrade account, trying to beat the 10% annual return of the S&P 500, with a 5% chance of advancing to the next level, and a potential $1,500 gain, unless you find a better strategy, like a 12% dividend yield to stay ahead of the game. You've moved to a discount broker like Robinhood, saving $10 per trade, with your investment now at $5,000, but the 2% commission eats into your gains. And you're spending 20 hours a week analyzing stocks, trying to find the next big thing, with a 15% chance of advancing to the next level, and a potential $2,500 profit. But the market shifts are unpredictable, with a 5% daily fluctuation, and you're trying to make a 12% monthly return, with a 10% stop loss to minimize your losses. You're now a day trader, making 10 trades a day with a $10,000 account, with a constant adrenaline rush as you try to make $500 per day, using a NASDAQ-level Roman II quote system, trying to stay one step ahead of the market, with a 10% chance of advancing to the next level, and a potential $5,000 gain. But the stress is taking a toll, with a 5-pound weight loss in the past month, and you're trying to maintain a 15% monthly return, with a 5% daily profit to stay in the game, and a 2% risk management strategy. You've moved to swing trading, holding positions for 2-5 days, with your account now at $20,000, and you're aiming for 20% monthly return, using a technical analysis software like MetaTrader, trying to identify trends, with a 12% chance of advancing to the next level, and a potential $8,000 profit. But you've had to sacrifice your social life, and the losing streaks are frustrating, with a 10% loss per trade, and you're trying to maintain a 15% annual return, with a 5% dividend yield to stay ahead of the game. You're now a position trader, holding positions for weeks or months, with your account at $50,000, and you're aiming for a 50% annual return, using a fundamental analysis approach, trying to find undervalued stocks, with a 15% chance of advancing to the next level, and a potential $25,000 gain. But the market crashes are a constant threat, and the waiting game is nerve-wracking, with a 20% chance of a market downturn, and you're trying to maintain a 12% monthly return, with a 10% stop loss to minimize your losses. Remember the retail trader from level 1. Most of them are gone, and you're now a hedge fund analyst, working with a $100 million fund, with a constant stream of financial models and investment meetings, using a Bloomberg terminal, trying to stay ahead of the competition, with a 5% chance of advancing to the next level, and a potential $50,000 bonus. But the pressure is intense, with a 1% mistake costing $1 million, and you're trying to maintain a 15% annual return, with a 12% dividend yield to stay in the game, and a 2% risk management strategy. You're now a portfolio manager, overseeing a $500 million portfolio, with a constant balancing act, as you try to optimize returns and minimize risk, using a portfolio optimization software like BlackRock's Aladdin, trying to stay ahead of the market, with a 10% chance of advancing to the next level, and a potential $200,000 bonus. but the responsibility is crushing, with a 1% mistake costing $5 million, and you're trying to maintain a 20% annual return with a 15% dividend yield to stay ahead of the game, and a 5% risk management strategy with a 10% stop loss. You're now an investment banker working on $1 billion deals with a constant stream of pitch books and client meetings, using a financial modeling software like Excel, trying to value companies with a 12% chance of advancing to the next level and a potential $500,000 bonus. But the hours are long, with 100 hours a week being normal, and the deal-making process is high stakes, with a 10% chance of failure, and you're trying to maintain a 25% annual return with a 20% dividend yield to stay in the game, and a 5% risk management strategy with a 15% contingency plan. You're now a private equity manager, overseeing a $5 billion fund with a constant stream of investment meetings and due diligence, using a private equity software like PitchBook, trying to find the next big opportunity with a 15% chance of advancing to the next level and a potential $1 million bonus. But the pressure is intense, with a 1% mistake costing $50 million, and you're trying to maintain a 30% annual return with a 25% dividend yield to stay ahead of the game, and a 10% risk management strategy with a 20% contingency plan and a 5% hedging strategy. You're now a hedge fund manager, overseeing a $10 billion fund with a constant stream of investment meetings and risk management, using a hedge fund software like Citadel, trying to stay ahead of the market with a 10% chance of advancing to the next level and a potential $5 million bonus. But the responsibility is crushing, with a 1% mistake costing $100 million, and you're trying to maintain a 35% annual return with a 30% dividend yield to stay in the game, and a 15% risk management strategy with a 25% contingency plan and a 10% hedging strategy and a 5% stop loss. You're now a billionaire investor with a $50 billion portfolio with a constant stream of investment meetings and philanthropy, using a family office software like Vanguard, trying to manage your wealth with a 5% chance of advancing to the next level and a potential $10 million bonus. But the pressure is intense, with a 1% mistake costing $500 million, and you're trying to maintain a 40% annual return with a 35% dividend yield to stay ahead of the game, and a 20% risk management strategy with a 30% contingency plan and a 15% hedging strategy and a 10% stop loss with a 5% charity donation. You're now a legendary trader with a $100 million trade with a constant stream of market analysis and interviews, using a Bloomberg terminal trying to stay ahead of the market with a 10% chance of advancing to the next level and a potential $20 million gain. But the reward is worth it, with a legendary reputation and a life of luxury with a 15% chance of being featured in a major publication, and you're trying to maintain a 45% annual return with a 40% dividend yield to stay in the game, and a 25% risk management strategy with a 35% contingency plan and a 20% hedging strategy and a 15% stop loss. The climb costs 10 years of your life, $100,000 in losses and 1,000 sleepless nights. But the payoff is $100 million, a legendary reputation and a life of luxury with a 20% chance of achieving true financial freedom and a 10% chance of being remembered as one of the greatest traders of all time. But the question remains, was it worth it, with a 15% chance of regret and a 5% chance of burnout and a 10% chance of a market downturn? And you're trying to maintain a 50% annual return with a 45% dividend yield to stay ahead of the game and a 30% risk management strategy with a 40% contingency plan.